Welcome to Season 1, Episode 1 of Laundered, brought to you by RelyComply, the all-in-one anti-money laundering platform for enterprise financial services companies. I'm your host, Brad Elliott, and we are here to discuss everything related to financial crime, compliance, and hopefully the technology that's shaping the landscape as well. Super excited to have our guest here for our debut podcast that we are launching. It should be a really exciting conversation. What we're focusing on is the landscape in general, right? So the financial landscape in general. So financial institutions, fintechs, how they've come in and, should we use a disrupted word, disrupted the industry a bit, what that looks like from a regulatory point of view, what it looks like from a introducing new financial crime typologies perspective, what it looks like from a regulator's perspective, and more importantly, where to from here, where to into the future. So before delving in too deep, I would like our guests to introduce themselves. I think ladies first. I start with you, Kathryn. If you could just introduce yourself and tell us a bit about you.
I'm Kathryn. I head up the compliance and regulatory at Stitch. Stitch is an enterprise-focused fintech in South Africa that has also moved into the SME space through Stitch Express. And yeah, it's really great to be here.
Awesome. Thanks for joining. Mladen?
How's it, Brad? My name is Mladen Čolić. I'm the head of fintech at TransUnion Africa. We're predominantly a bureau, sit in a lot of data, we build a lot of cool products, and the ethos of what we try to do is solve for financial inclusion on the African continent.
Awesome. That's going to be interesting because in terms of our conversation, can traditional financial institutions, which I'd say a credit bureau is one, really play nicely with fintech? So it's going to be cool to hear your perspective. James?
I'm James Saunders, the CTO and one of the founders of RelyComply, so obviously I work with Brad. My background's in pure mathematics and computer science, and most of my career has been in the sort of advanced analytics space in one way, shape, or form, and then later getting into the anti-financial crime space. So ideally, I'm the person that answers the questions about computers.
Obviously, over the last 25-ish years, maybe a little bit longer, there's been a huge amount of change with the advent of kind of digital platforms, digital currencies now, and just overall like the internet coming into the world, right? And in terms of traditional institutions, traditional financial institutions, big banks, insurers, do you think they expected consumers' expectations and the kind of change that these new technologies brought into the world to have moved so quickly? And maybe I'll start with you, Kathryn.
No, I don't think so. I think the goal initially was kind of open up the payment system. The SARB really wanted to kind of create some sense of financial inclusion, and that was also just leveling the playing field between banks and fintechs. But like a really good example that I think about that may not necessarily resonate with anyone else is if you look at the 2007 like T4P directive. I think that's about 3 to 4 pages long, and I don't think the SARB or anyone really knew what level of like products would be offered, how banks would be offering products to fintechs, the collaboration. So really, the system has evolved in a way that I think the SARB didn't anticipate and most people didn't anticipate. But it obviously is kind of adjusting at the moment. They're moving into more of a risk-based approach. You're kind of changing some things here and there. So yeah, I don't think anyone expected it to kind of evolve the way it has.
No, I agree. I think if you just look at Africa, 51% of Africans don't live or reside in the country that they were born in. So that from a consumer behavior perspective, where they come from and where they're going, chalk and cheese. If you look at, what the EU has done in consolidating because of migration movements, I think globalization has had a huge impact in terms of where technology's gone, regulation changes. It's a one-stop shop now. You can converse with someone in America, you can send money to someone to New Zealand, you can ask for some money from India. So I think from a regulatory perspective, even though they've tried to, I just don't think there's any way regulations can change. You can't change regulation weekly, daily. They've got to implement, you've got to test, you've got to provide feedback from the markets, from the companies, from the consumers. So I think regulators will always be one step behind, but I think it's it can't be too far in the future either. Then you're kind of prohibiting what the future could look like. But at the same time, if you don't have the art of the possible as a framework, you're never going to move along. So I think they are in a bit of a rock and a hard place, if I'm honest. And I think, as we'll get through the podcast, I think, the sandbox environment, allowing for testing in an unregulated way without having real world implications, I think is a smart move to start seeing what changes are happening in the world and what technologies can and cannot do. But, it's a super exciting time to be alive, to be honest. I think, in Stitch, at TU, RelyComply, who would have thought, 30 years ago, 10 years ago, that we'd be sitting in conversations like this, where the interoperability, the fusion of our worlds are actually back to back. I think, there's no more them and then us. I think we're all in one big melting pot.
Yeah, I think that makes a lot of sense, Mladen. I think we'll get there in the kind of trajectory as well, like about how everyone's come together. Just shifting maybe from not so much of a regulatory lens, but pulling back into like more of a industry lens of kind of traditional financial institutions and these disruptions that fintech or changes that fintechs have brought in. James, maybe this one's for you. Do you think that was driven by, obviously, the advent of new technologies, right, is one thing, but do you think the advent of new technologies just opened up solutions for problems that traditional financial institutions were unable to solve, like we talk about cross-border remittance and these sorts of things? Or do you think it was that these new kind of emerging fintechs came about because of regulatory stifles, like regulatory hurdles, and they wanted to get around that? Or is it just solving real-world problems that financial institutions typically just weren't geared to do, if you think about traditional banking systems?
Yeah, sure. I mean, it's one of those terrible answers where it's probably a bit of all of those. But I don't know if it was so much that traditional finance wasn't geared to solve these problems, so much as they just didn't see there were even problems there. Because a lot of sort of the new way that there's a massive change in behavior when basically the iPhone got created, and you could have a bank, a shop, anything, a restaurant in your hand. So I think, and in South Africa, to be fair, our larger financial banks hopped on that train very quickly, far ahead of most other places in the world, and all power to them. But fundamentally, I think they looked at it as, can I take a bunch of my traditional brick and mortar services and put it on the phone, rather than reimagining the sort of speed and frequency which people would transact at. The whole idea of microtransactions really hasn't existed for that long. The idea that you would be digitally paying for 5 or 10 rand of parking, that would have been completely prohibitive, and was prohibitive given the old sort of traditional fee structures. So I think just there was a lot of innovation in the space because there were a lot of gaps that previously just didn't exist until that moment. It completely changed everything. And as much as sort of, blockchain is going to change the world, and AI is going to change the world, and AI on the blockchain is going to change the world, really, mobile changed the world. That was the killer app of the sort of second generation of the internet, by far. And that obviously now sort of opens up a lot more things. So yeah, I think there was that. I think this idea that you could have something with this sort of infrastructural effectiveness that wasn't a large bank to make payments and manage what is a very complicated system just never occurred to anyone because it was impossible. And when what is possible changes, it tends to change sort of in a snap. And you get new entrants, you get classic disruption. And then the regulation must follow, because there is the financial system's sort of integrity in both sort of the pure financing sense, but in the sense we're more talking about it in terms of sort of vulnerability to criminal exposure, is something that we have to look at a sort of all market entrance view. So regulation must catch up, and there must be a bit of pressure, but it must be fit for purpose.
I think that the policy and reg division at the SARB are doing their best. I think that even introducing fintechs into banks, so there's kind of like a symbiotic relationship, was probably one of the biggest things that could have happened, because you're kind of letting a participant participate in the payment system without necessarily having such deep-rooted ability to disturb it. So I think for fintechs to exist within the space as a part of that relationship, you have to be really good at what you do. You have to constantly kind of innovate. You have to be really, really quick. And if you're looking at the payment system of like digital payments, like you were talking about, I think it's like 30-ish% of South Africans are digital rejectors. So they don't want to pay through digital payments. Then I think 30-ish% just don't have access on a regular basis to the technology that would enable this. So like you've got such a small percent of the population that actually has the ability to kind of access his products through selling. Like how good do you want to be at that role?
And do you think that 30%, and this is a broader question, do you think that 30% that are not transacting, does that just boil down to trust? Trust in digital, just being a cash preference society because of particularly that trust in the financial system?
I think a lot of it has to do with digital literacy, to be honest. Like there's a lot of drive from the FSCA, from the SARB, PASA. Everybody's trying to get South Africans to kind of have a little bit more faith in that payment system. And I think with regulations, you could say they're restrictive, but at the same time, they're trying to get those people back into the digital space and do it with trust. So yeah, I think there's definitely going to be a push for that, but cash is still going to exist. It's not going away.
No, I agree fully. I think literacy, accessibility, and then trust. I think if you look at the Stokvel market, 50 billion rand, and that's a peer-to-peer. In essence, it's a peer-to-peer, not on a technology, but on a ledger. But who knows? Maybe the informal Ikazi, economies that we don't know. But I think if you look at the concept of, if I've lent something to Brad and Kathryn and James know that I've lent it and I default on that, the shame of me defaulting it is so powerful that the default rate on a Stokvel apparently is near to minimum. So there's that cultural element that we need to kind of think about. I think what they've done with PaySharp, looking at real-time payments. But again, it's education. What does it actually mean? How much of the population have smartphone versus feature phone? Can they use it? How does it use it? And then that introduces a whole new element to that, the regulation and the consumer. So from a TransUnion perspective, we have a big drive around what is credit. And there's a big misconception that credit is bad. Used incorrectly, credit is bad. But credit is the lifeblood of an economy. It takes you from a life stage to a life stage to a life stage. Interestingly, we conduct a number of pulse surveys just to have a dipstick in the market to see how consumers feeling about credit. And the worst performing sector is the financial sector. You would think us being in finance, I would understand how credit works, but too many inquiries brings your score down. Missing one payment brings your score down. But where do I go to rectify it? Who do I speak to? And you'd actually see consumers who are coming out of varsity also not having too much of an understanding, because we're not taught credit, or we taught about, there was in credits and accounting, but that was 20 years ago. I've never used it in my life. I was never taught credit. I was never taught interest, compound interest. And so it comes down to kind of a grassroots levels. How do we then, and the first exposure to credit I had was when I got a job and here's a credit card and how do I do these things? So it's elements, and I think, bringing it all together, answering and ticking each of those could get us to a leapfrog position in terms of literacy, adoption, understanding, and then obviously taking, our GDPs from a 1 or 2% to a 3, 4, 5%, where, we need to get it to get, the economy moving again.
Cool. James, any thoughts?
Yeah, a couple of thoughts. Just especially on the sort of cash side of things. So while when we're talking about digital payments, we generally mean digital to digital, either sort of wallet-based or inter-account payments. Probably the largest semi-digital payments system we have in South Africa is your e-wallet, cash send, instant money. Each of the banks has it, where you essentially get a PIN code and pull it out of the ATM, which from a sort of financial crime and financial surveillance point of view is a bit of a nightmare of a mix of product features, but we'll put that aside for a moment. And a lot of that is because people don't have bank accounts, because they either are migrants and can't access a bank account, or they don't have, there's a literacy problem, either technical or financial, around that. So cash is certainly going to remain a big part, but people are already often cash on only one side of the equation. Then just also thinking about whether this is sort of a trust or literacy point of view. If you take Germany, particularly Berlin, I used to travel in quite a lot. There, despite being an extremely advanced economy, until maybe, I don't know, a few years ago, everything was cash-based. You pulled out a credit card at a shop. Like, what scam is this? Even to like buying your train tickets only got digitized, I don't know, about 5 years ago or something, because there was such a distrust, especially from sort of post-war, Cold War era, of intangible money. So yeah, I think there's a literacy side of it, but there's also a legitimate side to that if we want people, there are a huge amount of benefits to digital transfers for an economy. Cash management is a nightmare from a criminal perspective. It's a nightmare both from a money laundering point of view, but actually from a cash and transit, pure cash management point of view. And once you have essentially your finances digitized, it opens a huge amount of other opportunities for other products that really do allow for financial inclusion. So it's important. But if we as a industry and as sort of market participants in that industry want to move towards that future, we've got to work a lot harder at actually building trust in these, either digital native or fully digitized financial products, which is pretty hard when, about every second blockchain thing turns out to be a scam. Maybe, 9 out of every 10. And a lot of people's entry into, especially sort of DeFi, distributed sort of blockchain stuff, a lot of people's first entry into that is getting scammed by someone. So that not only lowers the trust in those sort of environments, but in the broader sort of digital environment. What do we do about that? We can't sit here and complain that people aren't literate when they're quite right. They are often being scammed.
But it was interesting, just going back to just quickly around, did these kind of fintechs really disrupt traditional financial institutions? I mean, James and I just got back from Money Live in the UK, which is a conference there, a banking and payments conference. And I can't remember, I think it was the CIO or CEO of Lloyd's was talking about, their kind of digital transformation journey. And really the big takeouts there were like, they've actually created new markets. They haven't really so much cannibalized or stolen market share from traditional institutions so much as, like you said, James, created solutions to things that just weren't possible before, right? And what seems to be happening is that there seems to be, and I think we'll probably get to this later on, a lot more collaboration. You mentioned it between what the SARB did really well about bringing fintechs into banks is this collaboration between fintechs and banks, because fintechs have got a bunch of advantages around agility, speed to market, those types of things. Banks have got a lot of trust and a lot of sway with regulators, right?
And a lot of money.
And a lot of money, right? So that's quite interesting to see. But just going back to what you were saying, James, around this trust element, I think it's a really nice way to dovetail into the next part of our podcast, which is talking about the introduction of these really new kind of technologies around DeFi and crypto, and what do they mean? So yeah, maybe Kathryn, once again, I'll start with you because you haven't been talking for a while.
Yeah, I mean, I think crypto was on the SARB's radar maybe 2020, 2021. They had an IFWG position paper on it. And round about then, obviously, you did have really great crypto exchanges who took compliance quite seriously, and then there was some that really didn't. Combine that with digital literacy, and you had a lot of scams, you had a lot of fraud, and there was a lot of money laundering. Combined with that, you also don't have any regulatory structures that are able to kind of track this entire process. So the FIC, for example, didn't have anywhere to put a wallet address. most of the people at the FIC were still kind of trying to wrap their heads around what crypto was. So I think that when it was deemed an accountable institution, December 22, and then moved into the FSCA space, so it became a financial product, it was probably one of the more positive actions, because I think the FSCA as well are really good at looking at compliance and money laundering, and then also kind of keeping customers and the public safe. So they're slightly aggressive on it, and if you look at some of the kind of gazettes or notices they put out on scams, they're super proactive. But I think that from a practical perspective, they need more resources, and we also need to see like the actual regulatory infrastructure that people report into kind of growing. That needs to kind of like move into that space as well. Really, really great changes so far, but it's equally as hard to develop the regulations as it is to kind of change all the regulators.
Great. No, I agreed. I think from a crypto and a credit bureau, probably words no one's really ever used together before. But from our perspective, I think data is king in our world. So in our world, there are main regulators, obviously, National Credit Act, and then we've got an association called SACRA. Any financial service provider provides information on a daily basis to SACRA. We as bureaus then pull that data, we update the payment profile or your credit report, so that the next day, if a bank pulled and Brad took out a telco account, they would then say, okay, well, his disposable income is decreased. We maybe shouldn't expend or extend credit as much as we thought we should have. So in our world, heavily regulated, but then you've got these pockets of new technologies, you've got these new asset classes, you've got these new buying patterns from consumers, which we are blind to. And I guess, that starts, opening up conversations about how do you start working with privacy preserving data collaboration platforms where we can tokenize data that are outside of our world, but we can link it together to create a more holistic view of a consumer. So from a fraud perspective, from an AML perspective, are we actually seeing the right and the correct and the proper person who's actually supposed to be transacting here? So on our side, I think crypto is probably a more of a behavioral indicator to see what's the correlation between someone who's in crypto and their credit score. Hypothesis is probably someone who's in crypto has a good credit score, but is probably a bit of a risk taker. You look at the likes of some of these big retailers, obviously our biggest one, ShopRite, and what they've done, moved from a baked beans provider to now a data hub. They started a data conglomerate with the Data X team, literally creating variables, insights on James, who's an LSM10, and Brad's an LSM10. Brad is a house brand LSM10, and James is a affluent brand. Those are two very different, but they are the same LSMs. You treat them differently, but then that means also from a customer journey perspective, are there certain indicators that we should be looking out for because of the ways that they interact in data sources that we don't have access to? So I think from our side, staying close to regulation is key. Giving insights back into the economy is key, but we're also blinded by the fact that we're not obviously part of all of these new exciting technologies. And I guess, conversations like this and that's my earlier point around the fintech space and the collaboration, the ecosystem that we create is just going to, I believe, propel us as a financial services, industry. And I think to your point, the banks in South Africa compared to in some states in America, they still offer checks, they still accept checks. So where we are from a remittance ability to pay services on our apps is far beyond. So I think it's this balancing act of taking all these things into account with a regulated body like ours, but also allowing for almost like a free trade fintech ecosystem to flourish without too many boundaries.
Yeah. And before I let James get in, I mean, that's an interesting thing about us kind of leapfrogging, going back again. I think the Lloyd's people were super proud that like 70% of their customers are now using their app. And I mean, I don't know where we're in South Africa, but I think, to your point, I think we did leapfrog, a lot of other countries. James, outside of new criminal typologies, and as I said, this is going to be quite a big question. The role of regulation or regulators is, as Kathryn mentioned earlier, to keep, society at large safe, to educate consumers, build trust. All these things are importantly stop new criminal typologies. But how do we do this at a point where A, can they catch up? We've been discussing that a little bit. But B, where it's not prohibitive to financial inclusion. I know Mladen and I were having a chat earlier about Department of Home Affairs increasing prices and how that might exclude financial inclusion. But going back to your pay shop example, there is a real cost of compliance that comes with increased regulation, right? And that can actually make some new financial technologies or fintechs or emerging kind of payment platforms quite prohibitive, because now those businesses and those fintechs have to take into account that cost of compliance. And ultimately, if we're honest with ourselves, it'll get passed on to the consumer. So it's a very big question. I mean, this is obviously what we're here to discuss. How can everyone kind of come together? But maybe before we get there, just, new criminal typologies, I'm sure you wanted. I'm sure you had some great comments on crypto and DeFi there as well.
So let's start with an example. So the mother of a friend of mine recently got her WhatsApp account taken over. And I'll talk through this. So this is really about market participants. And then this most likely warehouse of scammers, because they immediately switched it to a business account so they could hook it up to a computer, because they have, just like a proper call center, various tools around making themselves more efficient, went out and started reaching out to her address book and saying that she was, a bit short of money or financially unsound, and, trying to get people to send money to, it was one of the e-wallets accounts. And a few people did, and now it's hell of an annoying. But I'm in a position where I know very senior people at Meta, and I know very senior people in the anti-financial crime space at the banks. And it still took me pulling personal connections there about 5 days to get this shut down. And this is our sort of two of our biggest sort of new criminal typologies that are digital but not crypto related. It's basically digital account takeover, which just didn't really exist before, and then authorized push payment fraud. So in this case, an account takeover, this in a way is a mixture of both, because someone's account is being taken over. That was most likely through a data leak, because a lot of the way we do our KYC still is you have a bunch of documents, but you've given those documents to like hundreds, if not thousands of institutions.
Over unsecured email.
Over unsecured email, or they're just sitting somewhere. We should accept that pretty much everyone in South Africa, a copy of their ID is on the dark web somewhere.
Would you say that globally as well, or just South Africa specifically?
No, I think I won't speak for the entire globe, because not everyone has IDs. But I think it's a general problem. And there's enough information that you can probably get some sort of privilege escalation and perform an account takeover. So that's a huge problem, right? Because then the next side of the scam is you've got these sort of authorized push payments, in this case an e-wallet, but it could have been a pay shop equally. Well, that's a bit more difficult because it actually goes to a bank account, but you often get those, or some sort of invoice forwarding scam or something like that. But when you're looking at the sort of market participants here, you have data providers, sometimes credit bureaus that get leaked, or bureau-like information that is stored incorrectly, that gives enough identifying information to perform an account takeover. Generally, the way this works is which is exactly what happened here, you SIM swap someone. So that's a vulnerability within your telecoms providers, right? But what you're actually trying to take over is your social media platforms, messaging platforms, to take over that account so that you can get someone to send money to someone that is not themselves. So they're essentially, our sort of new typology requires a problem between these four market participants that right now have almost no forum to engage directly with each other. And on some, I've got to say, a bit less of a desire. So if you just look at sort of the banking world on its own, you get SABRIC, which is this sort of interconnected industry body for banks to work together to stop fraud, right? How useful does that seem if most of the fraud is happening on a digital platform and you are just the last side there? Yeah. And, sadly, principally, what we should have just done is go to the police, and their cybercrimes division would know all the people to call, and it should take about 30 minutes to get everything shut down. But that's not realistically the case, unfortunately. So as much as there is, should that be regulated? How do you regulate that? Should a telecoms provider be in any way responsible for a crime committed using their network? Like, if I phone Brad and threaten him, is Vodacom going to be liable for that? That doesn't seem fair. If I'm a bank and a slightly different type of scam, like a romance scam, someone willingly goes and sends money to someone else, going through all the steps of authorization, should I be liable? In one sense, no, but in the other sense, I've been making money for 30 years off this person, and they get completely wiped out in one go, and I just sort of step back and say, tough. That doesn't seem fair either. So crafting the sort of levels of responsibility, especially in this very interconnected financial and digital ecosystem, is difficult. Building best practices and regulations around that is difficult. And actually, though, maybe what I'm trying to say is what normally is the most difficult thing, which is enforcement, if done correctly, I think could be a hell of a lot easier. It might be the easiest step. So yeah, I think that's where, from a sort of criminal typology and reacting to it, in sort of ultimately this is a law enforcement problem, and the whole sort of anti-money laundering apparatus was developed as a way to sort of deputize private industry to perform a quasi-law enforcement type role, which is why we have to be very careful about how we do it, because these are, very specific legal privileges that we have. So I don't know if that answers your question.
I think it just creates more questions than
Yeah,
answers.
I agree. I think you've touched on a number of things. I think maybe quickly just from my side. Take AI, generative AI. I just saw something from Adobe today. They're taking a 2D image, literally copying it, pressing a button, and it turns it into a 3D image without any visualization of what the behind. So a cartoon of a guy holding a sword, all of a sudden they can see beautiful shadows. So now, what does that mean from a deep fake perspective? What does it mean, from someone gaining access to your Facebook account? Just one sentence of you talking on Facebook, they can craft a if voice biometrics is one of the logons for a bank to authenticate.
Well, even ChatGPT, can do documents, like proper documents.
100%.
Generation.
Yeah. So you've got that element where now, okay, well, how do you, and I think the roles and responsibilities, the principles, and at the end of the day, you've got SABRIC, you've got SAFPS, you've got the insurance have their own fraud side, you've got the networks have their own fraud side. So are we saying that we need to have one centralized, huge data? Who runs that? Who's the admin of that?
And then once again, privacy laws, protect and this on data. What if that gets hacked?
If that and that's the way I'm getting to. So, bureaus in South Africa have been hacked. Telcos have been hacked. Garmin's been hacked. South Africa is in the top 3 of most fraudulent and breached countries in the world. They know that we are lax of passwords. We're not financially fit with regards to our I think day to day. So all our IDs, let's not pretend, are on the dark web. They know your address, your cell phone, your email, and that's enough to at least start the process. You get an email sent to a new email address. You do a couple of things. So you got all these new pockets of data, and you can stitch them all together, and you can probably break into most of the banks, insurers, retailers to get into some sort of account. And then to your point, whose responsibility was it? It wasn't me, but it was me. And then where does the liability? So it's new products can then be created, new regulations can be created, new partnerships should be created. Whose role is that to govern and then verify and at the end of the day, we're all here to make money at the same time. So we can't, not everything is an NGO at the same time. So it's a balancing act of, to your point, the cost then goes down to the consumer. And then that's the whole point, is then thrown out the window, because if PayShop is supposed to lower the cost of transacting, and then we're adding all these regulatory costs, who's going to pick it up? The consumer. So then we kind of back at the financial inclusion play. So don't know the answer, but I think, you've hit the nail on a number of topics in terms of data lakes, who owns it, how do we regulate it, who has access to it, how do we grow it? Do you go the China route and put cameras everywhere and everything's owned by the government? Probably not. Do you go free market and let everything just flow and hope that humans and money will eventually merge? No, probably not.
That was a messy one.
You warned us.
Hey, listen, you didn't. I did warn you.
Yeah, I mean, that was...
And then there's a thing with a free lunch here. So
Look, I think you could talk about Starbucks, you could talk about collaboration, but I think anytime you look at sharing data, most companies are just petrified of sharing data from their consumers to anyone. I think, like, the idea, even with open finance, you have to ask, like, is reciprocity going to be considered in open finance? Because, there has to be a give and take. And more often than not, you're probably going to get pushback from the massive incumbent that you're asking for reciprocity from. So I think, like, the data sharing as well, it would have to happen, but I think also the SARB are looking at kind of digital KYC, moving into that space. But again, it doesn't solve things like romance scams, which traditionally you could probably warn your mom about back in the day and just say, like, just watch out for XYZ. But what happens when your mom gets a call from you at like 9 p.m. on a Friday night and says, I'm in trouble? And, like, that's it. It's not you. It's digital voice. It's not. Yeah. What happens then? Like, how do you really, like, even as someone in the space, how do I kind of educate my own family about this? You can't really.
or your mom's dating Brad Pitt on Instagram, or thinks she is, which is quite a funny one. I don't know how far it goes, but and this is quite a paradox here, because we spoke earlier about fintechs coming in and creating or taking advantage or creating solutions to these new opportunities or whatever it may be, right? With them came a whole bunch of new criminal typologies, right? And it seems to me like the criminals, obviously the criminals just want to solve a problem, that is, how much money can we steal, right? And they're going, you mentioned it, cross verticals, right? Like cross telco, banks, everything. Whereas regulators and maybe the market participants, they're still quite siloed. They're not really solving the problem of how do we stop, money laundering in their own vertical, yes, maybe not across all of these kind of siloed verticals. And it's almost does the market, I don't even know if this is a regulatory thing, like, does the market need to act a little bit more like criminals in their agility, in their ability to solve the problem, in their use of technology? Maybe we talk about AI and generative AI and these things, like, while we can be quite facetious about some of them, the truth is they are causing a bit of havoc, especially on KYC and identity fraud and those sorts of things. So yeah, I don't have the answer. I'm just like, it's like you almost, that's the paradox, right? Like, this advent of technology created awesome financial inclusion, solutions to problems that people had traditionally. But at the same token, it created this whole advent of crime, like financial crime, which I don't know if it can be solved with one regulator or one set of regulation, and can the regulation, this is the old adage, and it goes back to traditional financial institutions or businesses, let's just call them, versus startups and fintechs, or in this case, startup and fintechs, like the ability to actually move as quickly and the desire to move as quickly. It always seems like criminal typologies will always be a little bit more ahead. Maybe because market incumbents are just big and very difficult to coordinate, and I don't know. I don't have the answers. These are just more comments. Happy for you to disagree with them completely. Of course, regulation can play a huge role and catch up, but it's almost like, yeah, where do you go to?
I think regulation can help guide an industry, but if you look at, like, all the segments of different licenses you can get, different types of FSPs, looking at CASPs, like the various ways you can work with crypto, it's just, if you move into more of an activity-based licensing regime, you can assess the risks on your activity and kind of regulate against that. But I think also just from like a regulatory, some sort of management body that can kind of help the industry come together and fight this. I don't know how that would look, because would banks work with the fintechs in this space? Would they share data? Yes, it's a collaborative effort, but also, there's competitions like this fintechs with this bank. Do they want to share with this other bank? It's tricky. So I think a lot of what people are doing now is kind of taking it in-house, because they know their customer base, they know their clients, and they're building fraud engines and ways to mitigate financial crime around what they know. And it's hard to kind of solve for the entire industry, but a lot of fintechs in South Africa are so proactive about this. So it's like starting small, but maybe one day there'll be some kind of nirvana where we can all get along and work together. But it's just, I don't know how that would look. I agree.
Yeah, it seems like it goes on back down to traditional human behavioral psychology of incentives, right? It feels like, well, I think it's the most incentivized market participant are the ones that are paying the most attention to it. And the ones that are losing most are probably the financial services businesses and fintechs, if you're looking at financial criminal typologies. I mean, Vodacom, telcos, are they really losing out on a SIM swap and those sorts of things? I'm not sure. Probably not. I don't know.
Talking about SIM swaps, I mean, there's some of the data that we have. So as an example, a consumer that SIM swaps more than 5 times in 7 days has a high probability of
What do you think?
some swaps of 14 in 20 days.
Some advanced status just why are we not using, why are we not using one? Because I know this model exists.
Correct,
right?
100%. So how are we not integrating that into...
But where are we? It does come to like, where does the locus of responsibility lie? And that is both, regulation is to ultimately apply pressure to people that might not necessarily traditionally be directly in their financial interests to change their behavior in a certain way. But there's got to be, especially for sort of banks who ultimately are where the money is kept, for most people, there's got to be sort of a reputational problem if it is certainly in your interest to protect your customers, because your customers will leave.
Well, we've heard that firsthand, right?
Yeah.
Attrition in the banks, and sorry to focus on the traditional guy, but it's basically attrition of customers, because it's not even bank side fraud, customer side fraud. The customer is at fault in the vertical, but the cost to acquire new customers and retain your customers, versus retaining customers is much higher. So sorry, there was a reputational play there.
Yeah, but I do think, if we're talking about all this, how great it is to have all these new sort of diverse market participants and the sort of distributed, not in the sort of cryptocurrency sense of the word, but financial system, as opposed to just centralized around a few big banks and insurers, and we've got a whole bunch of new ways to transact. There's not much point. There's no point in having sort of a few extremely hardened points like the banks that spend an enormous amount of money on sort of the anti-financial crime side. And you've sort of built this amazing thick plate steel gate, and then around it you have like a little picket fence or something like that. We've got to start thinking, if we view it as worthwhile at all to protect the integrity of the financial system, it has to be done everywhere. How do we make that feasible for especially like new market fintechs? Is something we've got to think, because you can't have people repeating the same work all the time, have people absorbing that cost. It's going to either make some products prohibitively expensive, or it's ultimately going to create this sort of secondary harm of, on a financial inclusion side, people can't get products that are specific and valuable to them. Is that some sort of shared technology platforms. Obviously, we are sort of one of those. But is it shared learnings? Is it sort of shared forums? But you can't. It's clearly irrational to have the giant steel gates with the picket fence, and it's clearly irrational to expect every new fintech that comes along to have a fully functioning bank level anti-financial crime team. How do we sort of, square that circle? It requires some thinking.
Look, for me, I'd probably put my money on this privacy preserving, the whole cryptography,
Homomorphic encryption.
tokenization, hashing, the ability to distinctly, but anonymously say that it is Brad in all of these data sets. There's something in there that I think allows each first-party data owner to keep control of their IP and PII, but at the same time, an example would be a mule. In mules, FMB, as an example, would prove and say that Kathryn is a mule, but don't share that.
Don't worry, we don't
A mule, just to be clear. Disclaimer: Mladen's a mule, but only within that bank. They're not going to go and publish it anywhere else. So I could then go to Standard Bank and do the exact same thing, and I can go to Epps and do the same thing. So in a privacy-preserving data collaboration platform, FMB could put that token and with that flag and say, this token is a mule. So the customer journey would come into an APSA. The APSA would then ping this consortium play. Oh, ping, this token is a mule. Added AML reporting and monitoring. And so for me, the future is really around these massive data lakes, all tokenized. If they get breached, hopefully there's a way of ensuring that the token in there is not the same token that was, developed behind the first party data owner. So there's some fancy tech guys that can think about that. But for me, that's the only real way of taking away the voice and the duplication of the face and information that Brad knows about me because of the breach. And all these new data sources that are going to be coming in the future. We don't even know about the new data of fintechs that are going to be coming out of the products and what variables we could create out of that can then dupe the next wave of regulation that we come in. So for me, something in tokenization allows us to see everything without anyone losing sight of compliance and privacy laws and making sure that we prepare compliance in GDPR and CCPA and all those. But it doesn't stifle innovation. I think it allows clarity and then actually probably new industries that we haven't even thought about, because now we're seeing retail data with medical data and travel data and social media data, but in a compliant manner and hopefully that then lowers down costs, that allows broader reach and new societal issues that we didn't think we needed.
Big vision.
I think this is just kind of thinking from a regulatory perspective. When would you kind of like be disenfranchising someone who fell for a romance scam? If I fell for a romance scam at FNB, that information was shared with Standard Bank, FNB decided to offboard me for whatever reason, or even if there was fraud, how many years would it take for someone to be considered safe again and access back to the financial system? Like, I think that's where the regulation comes in. So you can have bodies that kind of collaborate in that way, but this is where regulators come in and they make it completely kind of structured and like force the rules on you. So I think that's a question. But data lakes and tokenization it sounds great.
You almost need like a new regulatory body, because I mean, let's be honest, how many times over the last 10 years in the industry have you heard the words collaboration? Like, we can talk about collaboration between all market participants, and it's like, there needs to be will there. And I think that is my kind of underlying philosophical question. James actually raised a good question. He said a statement, and I can't repeat it word for word, but something along the lines of, do we actually think, he said it much better than this, like financial crime is worth stopping? Like, is the effect on society big enough to fight the big fight? Like,
well, I saw a stat that fraud,
monetary side. Sorry.
it's a $5 trillion.
Sure. But what does that mean? Like, so it's because money is like, we can get philosophical and just be like, money is money. Like, it's just all made up anyway, right? But like, what does that actually mean for society? Like, who does that cost? Yes, it costs the victim sitting at the end of the romance scam, or unfortunately, like having your account hacked, your social media account hacked. But like, okay, and how does that affect us as a society? So that's a much broader, deeper question. You got some thoughts there.
I was talking to a colleague in the industry, and they were talking about the importance of just simple KYC checks. And they said they eventually found out that this account had 6 months of activity and was essentially being used for child pornography. So you can look at fraud and you can think romance scam. That sucks. That's lame. Your mom's obviously not dating Brad Pitt, but that's the other side of the financial crimes side.
No, that's the part that we should be thinking about.
It's just, that is the reason why I think a lot of my colleagues in the space genuinely care about what they do and kind of work themselves to the bone to
And I don't want to
fix-
take away from
yeah.
that at all. My question wasn't aimed at that, because I think that's what I was hoping we were going to get to, is like, how do we get market participants to be, are they incentivized to care about that level of what's going on? Because we're talking about financing of terrorism.
Yeah.
We're talking about human trafficking. Yeah. We're talking about a bunch of things, right? And like, are they incentivized enough to stop it all? As a whole, are we all incentivized enough to stop it? Because that's the actual societal impact. The $1 trillion or the 5% global GDP, or whatever stat you want to rattle out, is not it's just a number. It's like, what is the actual impact?
It's a human life. It's a family being,
And is there enough drive and incentive?
I mean, on one hand, there has to be, right? Because otherwise you just don't have a functioning society.
Correct.
On the other hand, and the site, I'm stealing from Patrick McKenzie, is the optimal amount of fraud for a bank is not zero. There is a bit of, there's sort of a cost-benefit analysis that they are going to do. But look, and I mean, we've been talking a lot about sort of the fraud scam side of things, but on the sort of money laundering side, your primary predicate crimes behind money laundering, at least in South Africa, and these are all sort of interrelated, unfortunately, because a lot of our political system is very integrated with organized crime, is obviously corruption, and that's generally local municipal level. There's some sort of grand corruption, state capture, but actually the big problem is at municipal level. Extortion, which links into that, which is just rapidly running out of control. I mean, it's already out of control, but whereas it was somewhat localized before in Western Cape, and these, although they look similar to each other, actually have completely different genesis. KZN and to a degree Johannesburg is now spreading all over the country. And that is fundamentally something. At the end of the day, Nicole Johnson was banking with someone when she was with Ralph Stansfield running one of the biggest extortion rackets in South Africa, definitely, and certainly in the Western Cape, which everyone knew about. She was definitely banking with someone. Is that okay? No, it can't be. No? How do we, is there a question that this is actually, should properly be the remit of law enforcement? That's a reasonable argument. In a financial system as complex as we have made it, for good reasons or ill, do we expect law enforcement, because it's not just our country that has sort of the anti-money laundering laws that we do. Really, it's the Bank Secrecy Act from the US that sort of put it on the global scene. It was a global problem. Somewhere around the 80s, everyone realized that law enforcement on its own could not fight organized crime. And that's why we have anti-money laundering laws. The whole counterterrorism stuff only came post-2001 and is actually, we lumped it under the same regulation because it seemed convenient, I guess. But it's actually like a completely different typology and really a different problem. So yeah, the answer being, this is a completely intractable problem and we shouldn't do anything about it. It's just not acceptable.
That was not
That I don't think that was your answer. But
A, from a moral point of view, I would not want that to be the answer. But also B, from a business point of view.
that is what we do for a living.
Yeah.
But do we have to? You don't fix things just by creating new regulations or new regulators or like shuffling, chairs on the deck of the Titanic. But if the fundamental nature of the financial system has changed and the fundamental ways it is being abused have changed, have we changed our enforcement and regulatory architecture enough? I would hazard the answer is no. Is it completely clear what that is? No. Do I think it probably has to take a much more technologically sort of first view? It probably has to create much better lateral relationships between our actual law enforcement agencies and the sort of private divisions, especially at the sort of heart of our financial system. And does that probably need some sort of better clearinghouse mechanism, which I think your idea is very interesting, as I've got a degree in cryptography, so I also know it's very hard. But I don't know if it has to be that intense data sharing. I think there are sort of middle grounds there where it's really the operations around it that we are lacking. And given the importance of it to society and just the sheer amount of money involved, I'm not convinced that if it's impossible to get the right people around the right table and get enough investment to have something like that happening. It does, to your point, because it is so sensitive, it has to have regulatory oversight. It has to actually be, architected by legislation.
Regulators kind of legitimize things
Yes,
like that.
absolutely. And also control them, because you don't want these things getting out of hand. I mean, this is going into like a slightly different type of crime. But I think if we remember around sort of 2016, where South Africa had about 3 parallel state intelligence agencies running rogue around each other, that's exactly the sort of power you don't want in an unregulated space, and of course havoc. And we're still recovering from that. In fact, a lot of our criminal intelligence and national intelligence and the NPA was so completely gutted by that a lot of the conversations we're having about law enforcement agencies not having that capability is because of that. And that was fundamentally because you let extremely well-equipped, somewhat nefarious institutions, unfortunately at the time, run rogue without proper regulatory oversight. So, no, I fully see the importance.
So I think we all agree, like morally, crime
It's bad.
is bad. I think just
Certainly a more contentious issue than it would have been a year ago.
just in closing off, I think we've heard, right, like you've got some technology player, like some great ideas coming out of Mladen. Data's one side. If it did ever come together, would we actually use it correctly? Who knows, right? You've spoken a lot about regulators and their role. We've spoken about law enforcement. We've spoken about the private sector. So we keep going back down to collaboration. You said, the financial incentive is even high enough that we should be able to get people around the table to solve this. And maybe we do need to relook, because the entire financial world has changed so much so quickly. It's almost like the regulation and the will to fight all of the financial crime that's come out around that needs to be as equally as high and fast moving, which it hasn't been. We're playing catch up. So big question, but just to end off, kind of final comments from each of you, like where to from here? I mean, you can't Rome wasn't built in a day. You got to eat an elephant a bite at a time. Magic wand, but you can only do one thing. What is it, Kathryn?
Probably a magic wand would just be a slightly bigger table. So you've got banks, fintechs, and then possibly companies like RegTechs who also kind of, you make it your business to look at different typologies globally, locally. I think if there was a forum there for everybody to come to and kind of ingest data to, even just to the regulator, not to each other, so that they're able to form better laws around it, that would be great. But at the moment, it's so under-resourced. I think if you look at the data that they showed up for last year's reports, it was just insurmountable amount of data that they were looking at. I think it's inclusion there, it's resources, and I think it's collaboration across various sectors, not just the ones processing payments.
I think for me, what James has been saying, I think is for me is the law enforcement. I think there's got to be accountability and repercussions. When your kid is naughty, you discipline them, they learn, they know there's boundaries, and therefore, so I think, in my personal opinion, humans are creatures of habit. If you are in a lawless environment, you do whatever you can because you can get away with it. So my magic one, I think, from a prosecution perspective, dealing with state capture, showing that doing wrong is a repercussion, consequence, you go to jail, will have a massive impact from a consumer trust, from a people thinking twice. Humans are good. They are taught to be evil and taught to do different, bad things, especially when under financial distress. Some of our studies show that, people, when they are under financial distress, go to fraud. They have to find a way to provide for something. So prosecution, I think, for me, would probably be the magic wand if we could get that under control and just put the bad guys behind the bars.
James?
Yeah, magic wand. We could uninvent AI. No, I'm kidding.
It can hear us.
Can hear us.
You're screwed, man. It's in the universe now.
They carry to the hegemon. Look, I think it is just, what I was saying earlier, rethinking our enforcement architecture around this. It's got to be much more technically focused. And I do think if we could get reg tech players, your telecoms players, your financial and payments players, and telecoms, I include sort of the social networks in that. That's the main ingredients to every scam needs those. Every type of money laundering needs those. A huge amount of crimes have to have those. If we could get those people together to put some investment in for shared technical platforms around this, that could really just start out as an operational clearinghouse of you report something and they know all the right people to go talk to, I think we'd get a long way. But yeah, that is a
magic wand.
It is a magic one. There's a big, it's a very different societal architecture that we're bringing in there.
Really great answers, because we touched on all of them, right? I think consequences, law enforcement, great to be able to report all of this stuff and bring all the players around the table. But once it's reported, so what? To your point, regulators, how do they play the role in ensuring that everyone acts properly, is well looked after in this kind of forum, is super important. I've really enjoyed today's discussion. I don't think we solved any of the world's problems, but I definitely provoked a lot of thoughts. I just want to thank you all for coming to our debut podcast, being participants, being guests, your time, and for spending it with us. I know you're super busy in your schedule, so really, really appreciate it. And hopefully there'll be a few more episodes where you're here with us again. So thanks so much, Kathryn, Mladen, James. I'm sure you'll be on a few more in the future. Next time you can take this seat. I won't swap with you though. But cool. Thanks, everyone.
Thanks a lot.
Thanks
Good, guys.
for telling us.
Thank you.